So Kurt, we're here in Central Park. For most New Yorkers or people who visit here, they know you come here to relax and get away from the city, the noise. It seems like the markets are kind of doing the same thing. They're breathing, they're relaxing. Maybe they're taking in a picnic as well. What's going on here?
Now, markets have really come into a period of exceptionally low volatility. If you look at the measure of equity volatility by the VIX, that's near the very low levels. Rates have kind of come into a range. Credit spreads, same. Like credit spreads are very tight. We had to endure some pretty rocky, stormy seas in the spring and early summer with the announcement of the Liberation Day tariffs and a lot of other political noise. So it's all nice, clear skies, a great place to relax and unwind here in these summer months. Yeah.
We had producer price index come in recently at a rise of 0.9%, which was a multi-year high. What am I missing that the markets are saying this is okay right now?
Inflation's moving in the wrong direction, and the labor market is not as strong as it once was. And that is a problem for the Fed as they're setting monetary policy. But I think what they're going to do is they're going to look at the tariff rise as a one-time price increase, almost like a tax hike. And what financial markets do tend to like is when the Fed's cutting interest rates into a slowing economic environment. And they're cutting rates from a level that some think is maybe a bit too tight.
All right, so Kurt, here's the $1 million question. As you mentioned, volatility is near all-time lows. The stock market, S&P and NASDAQ are near all-time highs. Credit spreads are really tight. How long do you think that this kind of quiet, picnic-like atmosphere for the markets is going to last?
So yeah, the equity market we think is still in a bull market. And so we'd be buyers on dips. Fixed income is going to provide some cushion, and that's important. The bond market's telling us that there isn't really any concern about companies defaulting. If there's not a recession, that shouldn't be a big concern either. So how to get that cushion? Interest rates, they're around 4%. Add some investment grade corporate bonds, you're approaching 5%. That's good income. Gold is another diversifier that you can add into the portfolio that we think has upside. So those are some strategies that you can blend in. You're not just taking risk in the markets, which as you point out are at all-time highs. You have a diversified portfolio that is taking advantage of the upside, but with some volatility to dampen.
Great. Thank you, Kurt.
My pleasure. Good to be with you.
Picnic time.
That's right.